Welcome, and thank you for joining us today for Serving Up Compliance HCM for Restaurants. My name is Rachel Yanchis, and I'm a Vertical Marketing Specialist at Viventium. We are excited to have our Senior Manager of Research and Development, Yonina Shineweather, CPA, and our Product Engineer, Mia Saric, this afternoon as we learn how to ensure compliance in the restaurant industry. Before I hand this over to Yonina, I want you to know that we value your feedback from this session, and we look forward to sharing with you more insights that will help you grow your business successfully. If you have any questions throughout the webinar, please feel free to use your question feature on your toolbar to type them in so our presenters can address them at the end if there is time. For more information on our unique offering for your industry, please check out www.viventium.com/industries-restaurants. Yonina, we're looking forward to this session, and I'll hand it over to you to get started.
Thank you so much, Rachel, and I'm excited to be presenting today Serving Up Compliance, HCM for Restaurants. The restaurant industry is probably one of the most nuanced when it comes to payroll, both because we have tips involved and because we often have spread of hour requirements involved, at least for those clients in New York and those restaurants in New York State, and some other interesting twist balls that come our way, like split shift and other things that we'll be talking about today. So really what excites me about this is the fact that Viventium has so many features that are geared specifically for the restaurant industry that meet the needs of our food and beverage establishment clients, prospects, and we really have value to add and to be in it with you, which is really our goal at Viventium, is to really be in it with you and help you meet all of your various compliance needs. Now, the structure of our webinar today is going to be about half and half. That is, half me talking about compliance, regulations, laws, the right way to do things, so to speak, the management side of the human capital management, the HCM equation, and about a half hour of the human side, which is how to actually use Viventium. Viventium is living human focused software, and we're going to be doing a software tour to see how the features of Viventium are geared specially for the restaurant industry and how the features in Viventium can help you stay in compliance, and that my colleague Mia Saric is going to be presenting about halfway through. I do encourage you to ask questions as we go along because we're going to be really hands-on with some of the stuff we're doing today. You can use your toolbar to click on questions, and I do keep my eye on it as we go along. I like to tell everybody if you have a question as we're going through a webinar, probably some of the other participants today have the same question, and you'll be doing everyone a favor by asking it and giving me the chance to address it and work the answer into the presentation. A couple technical points. Today's session is being recorded. The recording will be uploaded to our website, to viventium.com. It'll be available together with the copy of the slides and the handout. So if you missed something that I've said, it's going to be there, for posterity. You'll be able to find it there. That said, let's take a look at today's menu. Today's menu consists of featured appetizer meal wage credit, and then going right into a soup course of tip wage credit, main dish of FICA tip credit and spread of hours, and some side dishes of allocated tips, uncollected taxes on tips, and finishing up with a dessert of split shift. And I just gave you on the right-hand side, maybe some of you have seen this already, some of a little description of Viventium's solutions for the restaurant industry. Now, what often happens is people get mixed up between tip wage credit and FICA tip credit. Some people don't even know how much money they could be saving with a FICA tip credit. Either they've never heard of it, or they feel it's something that's just too complicated, or it's just nothing that they really want to deal with on their plate. Viventium simplifies FICA tip credit for you. Today I'm going to explain to you how FICA tip credit can save you money that you might not have even known was available to you, and then Mia is going to show you in Viventium how easy it is to actually claim your FICA tip credit. In addition, we also have a tip wage credit, which is not to be confused with a FICA tip credit, and a meal wage credit, which is similar to the tip wage credit. We're going to be looking at both of them and seeing how you can actually be taking advantage of that to perhaps save money and perhaps to also meet your compliance requirements. Spread of hours is like the big, trap that a lot of businesses fall into if Department of Labor ever comes into you for any reason. That's like the first thing Department of Labor loves to look at when I'm talking about, I mean New York State DOL, when they come in to do any type of an audit or any type of just a document inspection, they're going to see right away, they're going to want to know, show us your compliance with spread of hours. Are you in compliance with spread of hours? And you might look at them like, spread of what? Or even if you've heard of spread of hours, you might not know exactly how to go about calculating it. And again, this is something that Viventium is going to automate for you. We're going to see how that happens so that you don't find yourself out of compliance. And allocated tips, again, one of those big black holes in tips that, you know, some restaurants have never heard of and some have heard of, but not quite sure if it applies to them or not, or how to go about it. So really we need to take a good look at allocated tips and see what it means to you, who it applies to, and how Viventium can help you stay in compliance with it. So that's just our introductory menu. Now let's get started. What is a meal wage credit? Very often, as you know, you have employees in your restaurant and they're eating because it's mealtime. They're serving, and then, you know, they have a break here and there, or maybe there's an official break where they can go back into the kitchen and they can eat a meal. That's kind of standard practice in the industry. I'm not sure if you're aware, but that's what we're going to learn about today, that the value of that meal can be counted toward the compensation that you're paying to your employee, and you can actually therefore pay them less, a lower minimum amount, and still be in compliance with New York State or other state minimum wage laws. Every state, some states don't recognize meal credits at all, but every state that recognizes it has its own meal credit amount. There's an amount for federal law, just like minimum wage, right? There's the federal minimum wage, and then there's the state amounts. So there's a federal meal wage credit, which we'll look at soon in the numbers, and there's also a state meal wage credit for those states that allow it. Now, there's a couple of requirements in order for you to pay less in exchange for the meals. The meals have to be for the benefit and convenience of employees. Now, that's allowed even if the employee can't go out to get their meal anywhere else. Like they have to, you know, they're on call for serving and they're eating in between or whatever. So that's okay. That's still called benefit and convenience of employees, even though it's the work that's keeping them from going elsewhere. The practice in the industry has been upheld to be deemed that when restaurants give their employees meals, that has been upheld, the practice has been upheld, that can count as benefit and convenience of the employees. A restaurant giving employees meals meets this requirement of benefit and convenience of employees. The employee has to be able, though, to decline and say, I don't want the meal, and instead don't take a credit and give me the full minimum wage. So in other words, it can't be that, you know, you're forcing them to take the meal instead of full minimum wage. They have to have the ability of declining. It has to be the employee's choice. And New York State has its own menu of what has to be in a meal. Has to have one of each of these: the fruit or veggies, the grains or potatoes, the protein stuff, eggs, fish, meat, poultry, etc., and then some type of a drink that, you know, tea, coffee, milk, or juice. So in order to be called a meal, to be used as a credit against your minimum wage obligation, has to contain one of each of those. So let's take a look now at an example. So we have Jose Hernandez. He's a cook for Hot House Heaven, a large food and beverage establishment in New York City. Why am I telling you that it's large? Why is that word there important? Because minimum wage is different in New York City for large employers and for small employers. So we're going to be looking at minimum wage for large employers. Now, Jose works 8 hours a day, 5 days a week, and Hot House provides him with lunch and dinner on site daily. The reasonable value of the lunch is $8 and of the dinner is $10. What's the minimum that Hot House can pay Jose for a week under federal law and under state law? Let's work our way through the numbers. Okay. Let's first look at the federal side. How many hours did he work? 8 hours a day times 5 days. That's 40 hours. The full minimum wage for federal purposes is $7.25 an hour times the 40 hours. So he would need to get at least $290 to meet minimum wage. However, federal law says you can take a credit against your minimum wage for the fair market value, or they call the reasonable value of those meals. So if the reasonable value of the lunch was $8, the reasonable value of the dinner was $10, and that was 5 days a week, that's a $90 value you provided for the benefit and convenience of your employee. So therefore, you only have to pay him $200. according to federal law. But as we know, when there's a discrepancy between federal and state, and you have to give the one that's more favorable to the employee. So let's look at the city. New York City, again, you work those 40 hours. But what's minimum wage in New York City for a large employer of 11 employees or more? $11 times the 40 hours, that's 440. And New York City says, we're not going to let you take a credit for the reasonable value of the meal. We don't do that here in the city. We designate how much a meal is worth. You can take only up to $3.80 per meal. It doesn't matter, lunch, dinner. It has to have one of those 4 food categories, and the maximum you can take is $3.80. So he gets $3.80 for lunch, $3.80 for dinner, times 5 days a week. So you can only deduct $38. You have to pay him $402 if it's New York City. And I just pulled an example. Let's say you're in New Jersey. So again, it's the 40 hours. New Jersey's minimum wage across the board is $8.44 times the 40 hours. Total required pay $337.60. New Jersey, though, even though their minimum wage is different than federal, it's higher, but they do follow the federal practice of allowing you to deduct the reasonable value of the meal. So that would be the $8 for the lunch, the $10 for the dinner, the same $90. So in Jersey, it's kind of halfway between federal and New York. You'd have to pay him the $337 minus the $90, which would end up at $247.60. Any questions so far on meal wage credit? That's the simpler one. When we get into tip wage credit, it's going to be a little more complicated. So I want to go slowly, make sure that's clear. Okay. Now, before we start talking about tip credit, we have to know what are tips. So I think you all know what tips are. Gratuities. They are voluntary amounts that the consumer, that the customer pays to the employee, and it has to be reported by the employee to you, to the employer, assuming it's more than $20. But it's reported by the employee to the employer, must be reported in writing. They have to report it to you by the 10th day of the month following when they received it. And it applies separately to each employer. So in other words, that $20 threshold, if they work for a few different places and they earn less than $20 in each place, they don't have to report those tips. The employee can use Form 4070. Probably you've seen it. You're familiar with those little booklets of tip reporting. But they don't have to. Viventium actually provides a compliant reporting sheet. And when Mia does the software demonstration, the tour, she's going to be showing you where in Viventium you get that sheet. And it has, you can just have the employee sign off on the amount of tips that they're reporting. So you don't need to use the 4070 if you don't want to. And here's just a couple examples, if you'd like, of tip reporting. So we have Michael, who works for 2 places, Watson's Diner and Parkview Restaurant, in the same month, gets $70 tips while working at Watson's, $14 tips at Parkview. So his total tips for the month exceeds $20. But Michael does not have to report tips to either employer that month because it applies to each employer separately. And for any single employer, he did not cross the $20 threshold. However, the other example, Gert also works for Watson's and Parkview in the same month. She gets $25 from Watson's in tips from her waiting at Watson's, $12 from Parkview. So Gert must report her tip income to Watson's, the $25 for that month, but she still doesn't have to report to Parkview. So even if she crosses the $20 threshold, she only has to report to the establishment in which she crosses the threshold. So that's as far as tip goes. Another thing about tips we mentioned, they have to be voluntary, can't be required. They have to come from the customer. They can't be negotiated with the employer, which means if you have something like a mandatory service charge, that's not a tip. Anything mandatory is not a tip. That's regular income to the employee, and it's not. I'm sorry. It's what a mandatory service charge. If you're keeping it, then it's just it doesn't go to the employee at all. If it's something you're paying over to the employee, it can maybe income to the employee, but it's not a tip. It's not voluntary, and it's not coming from the customer. That does not mean that the customer can't put it on their check. The customer can, if they write a check to you to pay their bill, they can include an amount and designate it as tips. That's fine. It still stays as tips. It can even be charged on the credit card. It could be cash or credit. But if the customer gives something like a ball game ticket, or a gift certificate to an employee, that's not counted as tips. It's still taxable to the employee, technically, but it's not a tip. Tips are only cash or credit or check. And as we said, it's only reported if it's more than $20 a month. So now, how does tip wage credit work? Let's take a look at our example on the left-hand side. Symphony Steaks employs 50 waiters, pays the minimum wage, and takes full advantage of the tip credit. This week, Yasha Hafetz, a waiter, worked 39 hours and reported $100 in tips. How much is Yasha's gross pay? Let's work the numbers. Okay, roll up our sleeves, get our calculators. So first, we're going to do it from the federal point of view. Yasha worked 39 hours. The federal minimum cash wage is $2.13, meaning if someone gets tips, you can pay them as low as $2.13 in cash wage times those 39 hours, which means the base pay coming from the employer is only $83. We add to that the $100 that Yasha pocketed directly from customers, and therefore the regular pay before any employer supplement is $183. That's what if there were no other laws, that's what he would go home with. But we do have a minimum wage law, and the minimum federal wage is $7.25. Times those 39 hours would mean Yasha has to get at least $282 between what you give him and what the tips are. Is he getting at least $282? No, he's only getting $183. The difference between the $183 and the $282 is what the employer must add, and Viventium does this for you automatically. Of course, you have to request. We never increase wages that you pay to your employees unless you request it in the setup. But if you request to be set up for compliance with minimum wage and with tip wage credit, we'll do this calculation for you. You don't have to sit with any spreadsheets, and we will figure out how much has to be added on to the employee's pay, in this case $99. So the total gross that the employee is going to receive is now the $183, which was the base pay plus the tips. In addition, the $99 is going to bring his pay up to $282, which is the minimum required amount. And the employer's out-of-pocket is the numbers that are bolded here, the 83, which was the original base pay, and the 99 supplement. So the amount coming from the employer is 182. The amount from tips is the 282. Okay, that's how it works with federal. Now, cities are the same idea, except the numbers are different. So New York City says we do not allow something as low as $2.13 of cash wage. If you have a food service worker, like a waiter, you have to pay at least $7.50 in cash wage. So you have to pay him at least, for his 39 hours, at least $292. Very well and good, he got $100 in tips. So that brings him to $392 in his pay before any employer supplement. Now, what does he have to get? Since it's a large employer in the city, it's $11 times 39 hours. He has to get $429. $392 doesn't make it. The difference between the $429 and the $392 is the employer amount that has to be added, which again, Viventium will calculate automatically, the $36.50. And the total gross then will come to the $392, which was the base pay plus the tips, plus the employer supplement of $429, and of course the employer out-of-pocket is only $329 because $100 came from tips, much higher than the federal. And New Jersey is kind of in between. New Jersey accepts the federal idea of $2.13 of cash wage, so that's in place, but the New Jersey minimum wage is higher. It's $8.44, not $7.25. So the New Jersey minimum required is $329, so the employer has to add on $146. And the total employer out-of-pocket comes to $229 in New Jersey. That's the way tip wage credit works. Again, no calculators, no spreadsheets, no add-on software. Viventium can do this for you if you choose. Now, the other side, the other kind of credit, which people mix up, is a FICA tip credit, not to be confused with the minimum wage credit. Minimum wage credit is Department of Labor. That's, they're in charge of the minimum enforcement of minimum wage. FICA tip credit is an IRS concept. What is it? It's a corporate tax credit that you as an employer can take on your income tax return, your 1120 or whatever income tax return you file. It's a credit against your corporate income tax. Where did this come from? Why is the IRS giving you a credit against your corporate income tax for FICA taxes? What's going on here? So, in the olden days, employers did not have to pay FICA on their employees' tips. There was, at first there was no FICA on tips at all, and then it kind of phased in. And in any case, after the tax reform of 1986, 1987, those big reforms under Reagan, I believe it was, tips became subject to FICA for employers. Employers had to pay FICA on the amount that their employees reported to them as tips. They had to pay 7.65, Social Security and Medicare. They had to pay that in. And employers weren't too happy because they were saying, look, one thing, if we pay an employee a wage, then we understand why we have to pay Social Security. We're paying them a wage. We have to pay into the system for them. It makes sense. But when they receive tips from customers, like, why should we get burdened with having to pay FICA on their tips? That's between them and the customer, right? So they weren't too happy, and there was a lot of lobbying that went on until about 1993 when Congress passed the FICA tip credit provisions. And what they said is, yeah, we really want you to pay in. You know, the employees, they work hard, they deserve to get tips, and they deserve to get a pension when they retire, even based on the amount of their tips. So you do have to pay in, but we'll give you a break because we really understand your point also. And so any amount that you pay in to the Social Security system on your employees' tips, you can take that as a corporate tax credit on your corporate return. You can offset your income tax liability for the amount of Social Security tax that you pay on your employees' tips. Okay, so again, let's look at this in writing. The FICA tip credit equals the employer's FICA, that's 7.65, of the tips reported by the employees, except for what we just did a minute ago. If you use any of those tips as a FICA wage credit for Department of Labor purposes to meet your minimum wage requirements, then you don't get a credit for the FICA paid on those. Because when you think about it, it's kind of double dipping. If we're calling those tips, if we're using those tips to meet our own wage requirements, then it's only fair that we should have to pay FICA on them as an employer. They're not going to give us a credit for that. Because we're kind of treating them as wages. We're saying, yeah, that you got it from the customer, but we're going to use it so we don't have to pay you the minimum wage. So for that, the IRS says you can't get a credit, which is why you need to understand first what the tip wage credit is before you can understand the FICA tip credit. But anything in excess of those treated as wages for DOL purposes, those the employer can take on Form 8846. That's not a payroll tax form. That's a corporate tax form. That goes with your CPA should be aware of that. That goes with your income tax return. Form 8846 is where you show how much FICA you paid on your employees' reported tips, and you use that to offset your corporate income. Now, Viventium does this for you. You don't have to track anything. And not only does Viventium track your FICA tip credit, Viventium will only count those tips not used to meet the, and it's bolded here, the federal minimum wage. This is very important, very easy to make a mistake. We tend to think that if we're using the FICA tip credit to meet our $11 or our $8.44, depending on where we're located, you know, to meet our state minimum wage, then we can't get a credit on it, but that's wrong. FICA tip credit is an IRS credit. And so IRS doesn't care if your state has a higher minimum wage. You only have to discount those tips that you use to meet the 725, the federal minimum wage. And that's very important, and Viventium knows that. And so on the Viventium report, we will count only the tips that were not used to meet the federal minimum wage. Once that 725 was satisfied, the rest of the tips are going to be subject to, are going to be allowable for the FICA tip credit. And Mia's actually going to go into you, and she goes into our sample restaurant company, Viventium. When we go into Viventium, we're going to see, you know, the actual FICA tip credit reports. I just gave you a brief example here. Blondie's is an upstate New York eatery with one waiter, Dagwood, who was paid a weekly salary of $700. This week, Mr. Bumstead reports $1,000 in tips. How much FICA tip credit will Blondie's accumulate this week against its corporate tax? So he reported $1,000 in tips. Very simple, times 7, and apparently he didn't, no issues here with minimum wage, none given anyway in the example. So 765 times $1,000 is $76.50. Okay, now we are up to spread of hours. What spread? Where spread? Where does it all start? It all starts from here. Here's a copy of the New York State Rules and Regulations of the State of New York, and it states pretty innocently, additional rate for split shift and spread of hours. An employee shall receive 1 hour's pay at the basic minimum hourly wage rate in addition to the minimum wage requirements already required for any day in which the spread of hours exceeds 10. Okay, where does it say this? If you have, and you should have, especially in New York, and this is, by the way, if anybody here is from New Jersey, you can tune out on this part because this is specifically a New York State law. But if you've posted your New York State poster, your minimum wage poster. Go take a look at it on the wall. Down below on the right-hand side, I yellowed it out for you there, is something, a little innocent line called spread of hours. If your workday lasts longer than 10 hours, you may be entitled to extra daily pay. That does not mean if you work more than 10 hours. You could work less than 10 hours. But if your work day lasts 10 hours, meaning from the time you clock in for the first time to your employer until you clock out for the last time, doesn't matter if you have time off in between and you have clock outs in between, if your spread from the first clock in to the last clock out is more than 10 hours, you're entitled to an extra hour of pay. And this is a Viventium exclusive. Viventium is the only HCM provider that will support your spread of hour calculation. You don't need any add-ins. You don't need to use your time and attendance for this. You certainly don't need to sit with an Excel sheet to do it. I've given you a little bit of information. We have some basic question answers just describing what I just explained. Now, there's two kinds of spread of hours. The one that's interesting for us is the one for hospitality industry, and that says regardless of how much your employees get for a whole week, doesn't matter, even if they make more than the minimum wage for the whole week, but if there was a day or more than one day where their spread from their in time to their out time was more than 10 hours, you have to give them that extra hour, and you have to give it to them at full minimum wage. So if they're working in the city, it would be at $11. No tip credit allowed for this one, no meal credit allowed, full minimum wage. And here's an example. Waitress works 8 hours a day for 5 days in New York City, and she gets $12 above the minimum wage. On 2 of those days, her spread exceeds 10 hours. So her regular pay before spread would be the 8 hours times the 5 days times $12, $4.80. But since she works in the hospitality industry, she must be paid another $22 as spread because she had 2 spread days times the full minimum wage of 11. So her pay would be the $4.80 plus the 22. Okay, let's work through a comprehensive example how this spread of hours ties in with tips. So on the left-hand side, you have the example. The right-hand side, the pink, is going to be our blackboard. We're going to write there. So let's take the example. Wally Waiter works for Gator's Grits, Mediterranean-style large restaurant on the west side. Wally serves breakfast from 7 in the morning till 11. Then he has off. He can go do whatever he wants. Doesn't have to be paid for that time. And dinner from 7 to 11 p.m. 2 4-hour shifts, total of 8 hours a day. Wally worked this week 5 days, and he got tipped $500 from the diners. How much does Gators have to pay Wally to meet all of its obligations? Well, first of all, there's the base pay, right? He worked 40 hours, minimum cash wage in New York, $7.50, New York City, so his base pay is $300. Now, Wally also got tips from his tables of $500. So at this point, before anything else, Wally's going to go home. His gross is going to be, before the employer supplement, it's going to be $800. That's simple. So far, so good? Now, we have to figure out, were we really allowed to use that $7.50? Maybe we have to have an employer supplement. Maybe that's not enough to meet minimum wage. Let's see. The minimum wage required is 40 hours times $11, right? $440. Did we meet the $440 with the base plus the tips? Nodding your heads, yep, we did. $800 is more than $440. So in this case, there is no employer supplement required, not like our earlier example. Here, the tips were enough, so the employer took advantage of the tip wage credit. No employer supplement required above the $750, so the employer just has to pay $300. If we didn't know anything about spread of hours, we would stop here. We would say the employer pays $300, goes home with $500 in tips, and we're finished. But there is a spread of hour requirement because this is New York State. And Wally's day started at 7 a.m. It ended at 11 p.m. That's a spread of more than 10 hours. So for each of those 5 days, we have to give Wally an extra $11, $55. And so Gators has to pay Wally $355 in order to be compliant with both minimum wage and spread of hour requirements in New York. Viventium can do this for you automatically. We automate compliance, and like I said, this is like the first thing you know, like DOL can come in and say they want to find, and if they see you're good with spread of hours, then you even understand that and you really complied, then, you know, they may look more superficially at other stuff. But if they see that, you know, oh, we didn't know about spread of hours, we didn't understand it, well, they're going to say, you know, ignorance of the law is not bliss. Right? Ignorance is no excuse. Right? You know, there's some Latin expression that means that, but I don't know Latin. But that's going to be there, and then they're going to start scrutinizing, because if this law you didn't know, maybe there are other laws you didn't know, and let's take a look. So nobody wants to get into that. Use the Viventium spread of hours feature. Okay, we're going to just give a brief nod in the direction of allocated tips. Allocated tips is a little bit different than other industries. Allocated tips says, sometimes the IRS says, employee's income is just too low. We don't really believe you that you got so little in tips, Mr. Waiter, Ms. Waiter, Mr. Restaurant owner. We don't believe that this is the amount that your employees really got. And therefore, you have to impute income to them, even though they didn't report this income to you. But here on their W-2 in box 8, where it's highlighted in yellow, you have to allocate additional income to them that's going to be taxable to them. There's no withholding on it. You don't have to withhold, but the employees are going to have to pay taxes on it on their tax return. This applies if you employ more than 10 employees on an average day, and if the reported tips, the amount the employees have reported to you, end up being less than 8% of your total receipts. That's, of course, that's defined, what are total receipts, and there's a form, of course, an IRS form, the 8027, that if you have more than 10 employees, you have to file to prove whether or not you have to do allocated tips. And Viventium, you got it, gives you the information you need to do your tip allocation. There's 3 different ways of allocating. Once you see that your employees altogether reported too little, obviously people don't get across the board the same amount of income. It's an allocation. It's based on either gross receipts or hours worked or a good faith agreement. There's 3 different ways. The amount of allocated tips gets reported in box 8. And Viventium puts it there for you. And of course, it's carried through to Form W3, also box 8. I think someone had a sense of humor at the IRS. It's like an 8% threshold, and box 8 on the W2 and W3 that's used for allocated tips. So again, smaller restaurants don't have to worry about it. Larger restaurants do need to be using 8027 and using Viventium's business intelligence to extract this information. Business intelligence analytics is something that you're going to see very soon from Mia when she does the software tour with you. We also have uncollected FICA. Remember, in the restaurant industry, we're kind of in that twilight zone that the employer is both paying FICA on money that they never saw. They're paying that Social Security on the tips, like we spoke about a few minutes ago. They get a credit for it. And you're also withholding FICA tax from the employee's wages. And that FICA tax includes FICA tax on money that the employee just reported to you that they had gotten as tips, but that never passed through your hands. So usually the regular wages that you're holding for the employee, usually it's enough to cover the tax, but it can happen, and it does. We see this every year with some of our clients. What happens if there's just not enough wages in your hands? You don't have enough of the employee's money under your jurisdiction to collect all the FICA that's due on their reported tips. That's a situation called uncollected FICA. And again, Viventium supports this. It goes on Form W2 Box 12. It's a code. Code A for uncollected Social Security, code B for uncollected Medicare. So let's take, how could this happen? Let's take an example. Let's say we have somebody who's pretty much just an after-school waitress, not earning a whole lot, Carrie. She works for To Go, and she earned $75 this week in wages, but she reported $1,000 in tips. Like, the customers really loved her. Everybody wanted Carrie, to serve them, and they tipped her $1,000. Can To Go withhold the full FICA? No go, it can't. Why not? Because what's FICA on $1,000? What's Carrie's share? It's 7.65, so it's $76.50. To Go only is holding $75 of Carrie's money. There's no way to withhold that extra $1.50. All right, Carrie, in theory, Carrie could give it to them. Yes, the employee is allowed to give the money to the employer to pay their extra FICA. In practice, doesn't happen very often. People who earn this little are usually very happy to hold on to their tip money. They're not so interested in giving it back to cover taxes. And therefore, in this situation, there would be an A and a B on Carrie's W-2 reporting the amount that was not able to be withheld. No penalty, nothing wrong. It's just, Carrie's going to have to pay it on her tax return. That's uncollected FICA. For dessert, I mentioned split shift. There is another provision, if you noticed up above in the New York law that we looked at, that if someone works a split shift, meaning they work and then they have off and then they come back and they work again, you also have to pay them an extra $1 at minimum wage. But the good news is for our industry, for restaurants, the hospitality industry, there is no split shift premiums. That's just like a happy way to end. So just by example, you have 3 shifts a day. Let's say breakfast is from 8 to 10, lunch shift is from 1 to 3, and dinner is from 7 to 11 p.m. So if you schedule 2 waiters, let's say you schedule, Tim for breakfast and lunch, and Tom for dinner, you don't have to worry about split shift, because even though Tim is coming in 1 shift and then going out in another shift, split shift doesn't apply to restaurants. And spread of hours wouldn't apply here either, because Tim clocks in at 8, his last clock out is only 3, so that's less than 10 hours. Is that? Yeah, it's only 7 hours, right? That's good. And Tom is just from 7 to 11 p.m., so there's no spread of hours due either. So this is a way you can play around with your scheduling so that you don't fall into spread requirements, nor do you fall into split requirements. And that is going to tie up the compliance part of our presentation. I always like to say that, famous saying, in life, hard work beats talent. Tell that to my kids, hard work beats talent. With us at Viventium, we're in it with you, and at Viventium, hard work meets talent, and we call that remarkable. And therefore, I'd like to invite you to take a look at some of the remarkable features